So, the internet has been a fascinating cultural phenomenon, and we have to understand that really technology has changed the nature of money so dramatically. And I'm old enough to know when I was a kid, we used to have something called a passbook. It was called passbook savings or passbook checking. And you would take your book to your bank if you wanted money. You would give them the book, they'd give you some cash, and then they would use a typewriter, maybe a fancy typewriter, but still, they would literally type with ink into your book. It's like, okay, this was withdrawn, and here's your balance. The ledgers were still paper. We're talking about in the 60s and even 70s. That's so in the Federal Reserve, all of these systems ran on paper and bookkeeping like that. The computer was beginning to enter culture at the mainframe level. So very large companies could afford computers, but fundamentally, um, we were dealing with paper accounting. So, like a lot of things, paper, the computers began to replace that. Word processing, for example. I remember a fascinating picture of a secretarial pool. I can't remember where it was, which company, but they had a room with 100 secretaries in the room, and each of them had a typewriter. And so what they were doing was the the document would be handed to the first person. That person would hand it to the next person to proofread it and retype the whole document again. And that was word processing before the computer. One of the big innovations of word processing in my first business, which ran on a calculator and a typewriter, the energy conservation business. Right, there were no spreadsheets back then, so um, and I didn't have a secretarial pool, but the big technology innovation was something called whiteout and correction tape. So if you made an error, if it wasn't too big, you would type over. Like if you made a wrong letter, you would type over that letter with the correction tape, and then type over it again with the right letter. So you still had to retype a lot to get. I still remember even my last term papers in college when I was a senior. So that would have been 1982. That was all done on a typewriter, and I became a very good typist, but it wasn't that easy to do structural changes and things like that. Um, and and the notion even of typography, this was a big deal because again, for my first business, I wanted to have a kind of aesthetic, right? And so how did it work back then? Typography, what we all take for granted, was not a common thing. There was typewriters, which, if you've heard of courier typeface, that's replicating the typewriter. All typewriters look more or less the same. Um, there were a few innovations even in that, where this IBM had this thing called the Selectric, where you could replace, instead of having type keys, they had a little ball of type, and you could replace the ball and get different fonts. But what we think of as typography, title case and bold and all these things, if you want to design a flyer or some kind of packaging, you had to take your information to, there was companies called typographers. And so what they were using was early generation technology, a photographic process, and you would give them the words, and you'd specify the type font and the size, and they would spit out your words and your headlines on a glossy paper, and then you take that back to your home or your office or wherever you did your work, and you had something called a wax board, and you'd cut out the type, and you had a T-square to keep it lined up, and you'd use wax and paste all this stuff on the wax board, and that allowed you to move things a little bit and maybe make a few last corrections if you needed to by getting more type if you caught an error in that process. And then you take the whole thing and you take that to a printer, and the printer would take a photograph of that, then etch a plate, and finally print on paper. And that was life in business until the advent of the Macintosh, to be honest. So that was the late 80s that humanity, the notion of type and fonts became within the reach of an average person. Now, you might say, Mark, what the hell are you talking about this stuff for? Because, there's a reason for this. So, if you look before the era of the computer, you could distinguish between you might call legit businesses, because they had the best packaging for their products and the best looking materials, because they could afford huge staffs. They had whole art departments, and they still do. But what happened was the playing field got very levelized. By the end of the 80s, anybody that could afford a computer, or if you couldn't even afford a Mac, you could rent one. There were whole, companies where you just go in, they had rows of Macs, and you rent it for a little bit. That's what I did. I didn't think I could afford one then. I had a PC with 8 kilobytes of RAM back in the late 80s. But there was a store that had a bunch of Macs, and if I needed fonts and typography, I would go there. So I was on the cusp of this transition, and our friendly typographer, they went out of business because all of that intermediate work was no longer necessary. So the real term is a disintermediation. And if we really look at our money supply, there's a lot of intermediaries in there. There's the Federal Reserve and the banks, and there's just stacks of people between you and any kind of transaction you might want to do. And of course, they all want to take a slice out of it. So when you have disintermediation, the cost of things plummets. So the cost for me of making a professionally acceptable looking flyer or a mailer, a marketing piece, it just crashed, which was really great because marketing worked. And if I would send out a big mailing to my customer, the niche of who I was selling to, I would make money. So this was a huge transition brought on by the computer. And then now the banking system was a little slow in some of these things because banking is so transactional. But bit by bit, banking became computerized. And then that transactionality, certainly bank-to-bank transfers became more and more computerized. And then you had, now we're talking the later 90s, Amazon.com was really at the forefront of now disintermediating the actual transaction. So using, before the internet, there was not a whole lot of need for electronic, or not necessarily the need, but there wasn't much capacity for electronic monetary transactions. And Amazon spent millions, hundreds of millions of dollars perfecting the transaction. Now, anybody with and I've said this before, but you can, if you want, you can boot up Shopify for a few bucks a month, and you instantly have your own online monetary transaction system. So the commerce side of finances runs pretty good. It's pretty amazing. Companies like Stripe have really, because I've been at, I did my first transaction online in the 90s at the nonprofit organization that I built with my friends in Washington, D.C. And that was so hard. You had to line up so many different players in order to make a transaction to collect money online. Well, now, again, it's the cost to entry into e-commerce is not zero, but zero-ish. It's almost relative to anybody who has a computer in Western culture. The cost to operate an online store or to collect money for ebooks, it's a really trivial cost of the business, and that's created massive distribution of wealth amongst people who can understand how to create value online and collect the money. And I still remember when my first online store. When is this? This was in the. When did I put that up? I think it was the late 2000s. And seeing somebody actually give me money online that I didn't know, it was such an amazing experience. For look, I'm a boomer, I admit it, but and I joke around with my kids about that. But yeah, it was, to go again, that transition. I'm a person who's lived on both sides of the internet revolution, and this is so important to understanding, to have a framework of the power that's at our fingertips now. So I talked about sort of basic business tasks. Then now the cost to do transactions has plummeted. And now the real change is in the world of FinTech, financial technology. And a lot of FinTech, you might say, is associated with transactions, but the key transactions in our culture are the transactions of capital, when we're moving large sums of money around and trading those dollars or those currencies, whatever currency it is, exchanging those currencies into other forms of assets. And so, one of the really interesting examples of that is a company called Rally Road. I think it's rallyrd.com. And what they've done is they've taken an illiquid asset, which is collectibles like works of art or expensive cars, and through the combination of the power of financial technology and the improvements of law that Vegan Launch runs on, and e-commerce, by weaving those things together, now they've created liquidity in that market. And what Vegan Launch is doing is we're creating liquidity in the market for securities associated with vegan companies. And in order to do that, but when I started on this path back in the early 2000s, the transaction, the cost to be able to do that was about $5 million. And I did not succeed at raising the $5 million I needed to create essentially a publicly traded venture capital fund. Vegan Launch now, by stringing together a few platforms and creating a few good relationships, we essentially have a functional iteration of that kind of notion, the general public being involved in public venture capital. We're doing it now. If you want to look at the deals that we've developed in-house and that are raising capital, you just go to our website, veganlaunch.com. So if the cost of managing financial, securities transactions is also heading to zero, that means that we have this huge potential for distributed leadership. And we're looking at this evolution again. If we go back and from the earlier videos, where in feudalism, all the monetary powers consolidated in the hands of the kings, the nobility. Then we had now the 100 years ago, the evolution of the creation of the Federal Reserve Bank, and that was a power sharing, distributed power sharing in terms of monetary policy. And now, with the changes of law and the changes of FinTech, we're really at the cusp of distributed financial leadership. And this is so vital that we can distribute financial leadership, because the world's a big place, and centralized authorities tend to focus on keeping themselves in power and not really solving the problems of the world anymore. The wealth may have been created by solving problems from a generation or previous generations, and that's kind of a cycle. So, the real problem with veganism now is that the companies that are trading publicly, the few that appeal to vegans, were started a long time ago. Oatly was started 20 years ago. It just went public earlier this year. Beyond Meat, which is popular with vegan investors, that was formed over 10 years ago. And there was, a long run-up, a whole decade of private investing before the public could be involved. And so the real problem with the real problems with the public markets, the NASDAQ, New York Stock Exchange, and the other public markets around the world, is that they're snapshots of problems, or you could say they're snapshots of an old way of thinking, whether it's 10 years old or 20 years old. You're coming in very late, and what we really need, if we're going to turn this world around and solve climate change, is that we need to be able to move the whole culture together, financing things and people being involved much earlier, getting capital much earlier into companies, and moving away from this hyper-competitive result where there's only a few winners. And again, as I've described in other videos, look, I congratulate Oatly. This is not a critique of Oatly. This is a critique and an evaluation of the system and what's possible with the evolution of the system. So what's possible with the old system is that a company like Oatly could scratch together enough capital and then finally go public 20 years later. And their gross revenue for 2020 was $420 million. But the whole animal dairy industry is $600 billion a year. So again, this is no shade on Oatly, but we want to look as a vegan, as vegan financial leaders, what is it really going to take to transform the whole $600 billion animal dairy industry? If Oatly's under 0.5%, that means we need 200 Oatlys. That's going to require a lot of capital, and that capital needs to move quickly. And it's not just the capital. We have to look and see, what are the constraining factors? Are there enough oats? Or if it's another, are there enough yellow peas? Are there enough almonds or enough coconut? Like, how are we really going to get there? And so we have to look as investors at how we're going to work together to resolve the constraining factors. We have to work much more cooperatively than ever before if we're really going to solve the kind of problems that the world is facing. And fortunately for all of us, the tools that are at our fingertips to do this. And really my message to every vegan who wants to invest, whether it's $100 or $100 million, is that because we now have these new tools, we don't need to keep investing in the same ways that evolved from the old system. We have a whole new playing field. We have a whole new set of rules, a whole new set of potentialities, and leaders in other market niches, like I described, they're doing it already. And we have to ask ourselves as vegans, why not us?